Do 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 do. Square Inc. SQ. Viewer request on StockTwits, and let's check it out, guys. Some time has passed. It's on the New York Stock Exchange, technology sector, industry software. And man, this has been on a run. Look at this nice base. We're going to always do the monthly charting first, see where that higher prevailing trend is. And after that, we zoom in on the weekly, do some stage analysis, Stan Weinstein style. And this, I guess, maybe it was an IPO back in 2015, or maybe an uplist from another index. So I had nice base here, exploded. Oh, see, got away too far away. Let's zoom out. Check out. Whoa, got starting to go away too far away from the 12-month moving average. This is nice. Baby steps. Let the 12-month moving average catch up. Oh, this was too much. Sellers say, coming back in. So you know that that's a warning sign. Pull back close towards 12-month moving average. Explode. Sellers push it all the way down here. Buyers say, no, we're not quite done yet. And now they push too much up. They exaggerate. Sellers come in. And the body of the candles moving up, still getting away from that 12-month moving average. Just a little bit too much, guys. It looks great. Your NAV is exploding, but these are the warning signs, these long wicks right there. Indecision. Oh, explode again. And see, while each month that you have that sideways move, you're getting closer to the 12-month moving average. Safer territory, explode. Exaggerate, sellers come back in, explode, sellers come back in. Now you're starting to get really far away from that 12-month moving average. Whoa! Let's get even further, guys. Bam! So this is the type of thing you could sell into strength, expecting a pullback. Stan Weinstein, it's always selling into weakness. So on the pullbacks that have lower lows, then you get triggered out on trendline violations. After the valid trendline for Stan is 3 points. On the break on the fourth, take half your position out on the moving average violations. So it's always when the price action starts going down in weakness. But when you get away from the monthly average, from weekly average, this far away, you could sell into strength. Might not always good. So you got a little bit higher, but after that, eventually, it always pulls back close towards the 12-month average. And is that where we are today? Yeah. So I don't like this big red candle. I would have rather see some sideways move or small candles going at a less steeper pace. But when you get that far away, that exponential move gets corrected eventually. And after that, it results in damage. It's like a boxer starts a fight with his no scars, no problems. He goes in, and then these are small jabs. Doesn't make too much damage, but eventually, this is a big left hook to the body, and then it just crumbles you. And after that, for the remainder rounds, you're just not the same. And it takes time. You need a few rounds to catch your energy. And this is damage, just overhead resistance. That needs time to be chewed up by the market. When you have these small moves here, it gets chewed up without too much volatility. But this, look, you're still in an uptrend. You're still above the 12-month moving average. You're getting closer here. This I see as a better risk to reward when you're close like that on a small candle, getting close. On a big wick like that, and on a big candle like that, big drop, you're still above the 12-month moving average. You're still in an uptrend. So now we need more details. We're going to go on the weekly, and we're going to get details on how this is playable. So I don't know how maybe some sideways action here, and eventually another test of those previous highs here. But I believe you're going to need some time to digest this. Let's go see, guys. Let's go on the weekly. Whoa, look at my scribbles. Scribbles, scribbles, scribbles. Well, you see, you have an example here. Right there. Where's my arrow? Huge red volume. So what happened here? You're getting away. Let's zoom. There you go. You're so far away from the 30-week moving average after that breakout. Oh, look at that crazy red volume. Big correction, big candle, warning sign. You're still above the 30-week average. You're still above the 12-month moving average. But what this tells you is something has changed too far away from the 30-week average. You're waking up. People say, hey, it's time to take my profits. Time to take something off the table. And after that, 1 week, 2 weeks, 3 weeks, 4 weeks. 4 weeks, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 weeks before you overcome those previous highs. So it took some time. You had some room. You're still above the 3-week average. When you're getting close, move away. Oh, no, still some sellers, bring it back down, but still more buyers, always getting higher lows. So that's a good sign of an uptrend. It's just damage was created with this huge pullback candle in percentage-wise and in volume. And it's an indication that you need this type of situation here to happen before you continue. So what could happen during that consolidation period? Well, if a downturn happens in the markets or other bad news, then instead of this being digested and you continuing, you could be entering a stage 3. You could violate the 30-week average. You could violate the previous low, and then you're in a stage 3, and then it's no man's land. Either you break down to stage 4 or you recuperate and go back into stage 2. So this is not the ideal stage 2 continuation breakout. You wouldn't have wanted to see that red candle. But other than that, you still have all the symptoms of a healthy stage 2, other than this big red candle here. Decreasing red volume on the subsequent pullback candles. So that's how you get to measure a little bit of the health. And you're getting the same situation right pretty much here, guys. Getting too far away from the 3-week average. Huge red candle. Bam. Big warning sign. And now this time it got even closer. Had price action below 30-week average. Better signs. There's decreasing red volume right here on those candles. But you're still above that 30-week moving average. Remove all drawing tools. So now you could probably wait for another candle to see if it's going to close green and go back upwards. And you could consider this a good risk to reward entry. I would have rather see it. I'd rather see pullbacks close to 30-week average without this red candle right here. But other than that, we're going to probably need some time to digest, and it's probably going to enter stage 3. It won't have that sideways move, that the room that it had here to digest. So we're going to have to kind of see how that's going to go. Oh, maybe some digestion here, and after that, go try to retest those highs right here. So this is critical, very close to 30-week average. I don't know how hard it could bounce away from that 30-week average. To always try to stay above, to always state that you're not in the stage 3. Anytime you're close below 30-week average, even if it goes up, you don't want to be there. The trader's way, you're out. Investor's way, I guess you could consider it if you're early in the stage 2. But when you're deep in, it's a question of time for that stage 2 maybe to end. But always let the chart tell you when it's ending, not what you think. Oh, it's too far in. Because I could show you the Apple chart, and you'll see that if after 1 year of that bull run in Apple, say, it's been running for too long. Well, it ran for like 10 years, or maybe even more. So that's a beauty of stage 2. To maximize its full profits is to really, really respect the chart If you're above 30-week average, if you don't close below previous lows, always have higher lows, then stage two, guys. It's just a warning sign of increased volatility. Not a big fan, so we're going to have to see how this digests. And just be wary that if it starts closing below that 30-week average, you should be thinking about bailing, guys. Nothing wrong with that. Preserve your capital and try to get in on the stock when it's exploding at the beginning without these warning signs right here, guys. All right? That's it for Square. All right, guys. See ya. Yeah, subscribe, guys. Thanks.